Welcome and thank you for joining San Diego Real Estate Talk with Rosita. I'm Rosita, your host, realtor, and self-discovery coach. I get to help people find their way home, whether home is a physical home or if home is discovering the core of who you are. Today, our topic is attention buyers. We're going to give you some easy steps to apply for a home loan. Today, my guest is Paige Sturgeon. Paige is a mortgage broker and planner for Granite Mortgage and has been in business for over 20 years. The company motto is, "We are committed to quality customer service, putting the people we serve first." You know, you got to love technology. We are not able to get Paige's face on the screen, but he is joining us via audio. So welcome, Paige. Thank you for joining me today.
Yeah, thank you for having me, Rosita. It's really exciting to share the opportunities that home buyers have right now in this market. There's been a lot of negativity about rates being high and low inventory, but now is actually a perfect time. Right now, they're in the mid to low sixes on conventional loans and in the high fives on government loans, which would be FHA and VA and USDA loans, those government programs. The rates are typically lower because they're government guaranteed, which is less risk to the bank, and therefore the rates are a little lower. So, yeah, I mean, we're talking in the high fives and low sixes, and geez, in November, Rosita, last year, we were talking about 8%. So that's positive right there. There's more properties coming on the market, even though inventory is low. More properties are now coming on the market due, first of the year, typically after the holidays. People are now willing to put their places up for sale because they don't want people going through their homes, usually through Christmas and Thanksgiving, right? And that whole thing of trying to move during those two big holiday times of the year. So, yeah, there's a lot of positivity, I think, in the market, and a lot of opportunities for first-time home buyers to jump in. There's a myriad of different programs and products to help them, too, with low down payment.
That's what I was just going to say. This is, I mean, like you say, the interest rates were so high at the end of the year, and now they've come down almost 2 points, it sounds like.
Correct. Yeah, it's a big correction from when the Fed said in December that they're going to stop raising rates. It's kind of like some of the air out of the balloon that was going to pop. That pressure cooker, it got let out, and so it created some opportunities now of affordability where people can then make these payments because the prices are still higher, right?
Right.
But with the lower rates now, it's moving into affordability range because even rents, as we know, rents aren't cheap either. So when you compare rents to owning, most of the time owning a home, the payment's going to be a little higher, but with the tax benefits and the equity appreciation opportunities, and the pride of home ownership as opposed to renting is, I think, definitely a smarter way to go for your long-term investment opportunities and for tax benefits. So.
Absolutely. And today in this podcast, we are going to go through the steps of how to even apply for a mortgage so that buyers have a heads up of what they need to pull together as far as documentation and then how to move forward. So let's go ahead and walk through the process if we could, Paige.
Normally what I do is I try to set up a meeting either in person or Zoom, whatever's preferable. A lot of people, because of the pandemic, got comfortable with Zoom, and we have busy lives, so they don't want to sometimes meet face to face, so we could do it via Zoom. I'm old school. I like to kind of meet you in person, look you eye to eye and shake your hand. But it's whatever, you guys, whatever the buyer wants to do. I'm flexible and can accommodate. So typically what we do in that meeting is we would put the game plan together of where your finances are right now, right? The documents that we usually ask for are your, what I call 222. So your most recent 2 pay stubs, your most recent 2 years of W-2s, and your most recent 2 months bank statements. Okay, that's the kind of the meat and potatoes of qualifications. If you're self-employed or have rental properties or have a side hustle, then we'll want tax returns, right? To see what you show, okay, to the IRS for income. And then obviously too, we're going to ask for investments or retirement accounts, especially if you're going to use that to liquidate for down payment or closing costs. And so those are basically the main documents we're going to want to look at up front. So I can kind of look at your overall assets that you have in your cash available. Sometimes also people get gifts, Rosita, from family, right? So that's a conversation we'll have on how we structure that, what the banks require. If you're going to get a gift or help or even a cosigner, some people the parents, they want to qualify higher, they want parents or a family member to help cosign, right? So we talk about all those different options where they're at now and where they need to be to buy in the price range they want to buy in, right? And sometimes it's a reality check too of what payments would be and how much cash you need, right? So I'd probably say 50% of the people, Rosita, that I meet with, they're not ready yet, but we get them ready. We educate them and teach them. I give them a mortgage 101 class is what I kind of do.
Yeah. So basically, typically the documents that buyers will need to give you is
2 years of W-2s,
2 years.
W-2s, most recent 30 days of pay stubs, which is either one or two pay stubs, right?
Mhm.
And then most recent 2 months bank statements typically.
And that's for
Mhm.
everybody who's going to be on the loan.
That's correct. Everybody that's going to be in the loan, those are the documents that all the banks are going to ask for or require. And then also one of the other steps is we'll do a mortgage credit report, right? Which a mortgage credit report's a little bit different than what people pull on their own, right? Everybody can kind of see their score now because it's very, everybody wants to give it to you, your banks, Chase, Wells Fargo, Discover, credit unions. A lot of people have Credit Karma or Credit Wise, right? And so those scores are helpful for us, but it's not a mortgage credit score. The mortgage companies require the algorithm that they use is called the FICO model or the FICO credit score, which is going to be more conservative than the ones that the public sees because that's more of a consumer score. So the mortgage scoring system is more conservative and it's going to be typically a little bit lower than what they see, but it gives me an idea. If you say, hey, I don't want to pull credit now and I just want to get information, we don't need to pull credit. They can kind of tell me what their credit score is and I can kind of price it accordingly.
Okay, and so once they get the documents to you, first of all, do they have to give you the documents physically, or do you have on your site a page where they can upload the documents securely?
A really good question. So what I can either before we meet is I can send them a link to the loan portal. It's a secure link and safe. So the only people that can access it are me and the borrowers, right? So they actually go in to that link and they answer a few questions, their name, phone number, date of birth, where they've lived the last 2 years, where they worked the last 2 years, right? And then there's a little document manager on that link and you just upload and it gives you categories. Hey, pay stubs, W-2s, bank statements, and they just upload right to those categories. And then once they upload, it triggers an email to me saying, hey, Mr. and Mrs. Smith has uploaded pay stubs or bank statements or whatever. It tells me that, hey, alert, they're there. So I can go in and actually view them.
Mm-hmm. And that's important because like you say, people are so busy and they also have the option when they meet you in person to bring those documents as well.
Absolutely. Yeah. I have a copier here because we scan and fax and copy all day long. So yeah, if they want to bring them in old school, we can make copies, give them their originals back right there as well.
And even older school, if you pull your
Mhm.
documents together, I can bring them to Paige.
Exactly correct. Yes, appreciate that about you. You're a team player, whatever it takes. You're right, because people are busy and Rosita will go, well, hey, I can come by and pick up the documents and get them to Paige and get them back to you too. So, and that's what I love working with Rosita because it's really a team and we do the best we can to give you, not only a great, mortgage loan with a low rate, the lowest closing costs, but also the knowledge, expertise of Rosita's negotiating skills. And also that we'll take whatever it takes, the small things to make sure we're helping you. Mm-hmm.
Okay, so then the second step is really you take all the documents and basically look to see what they can afford in terms of mortgage payment, but also more importantly, what they want to pay so they're not house poor, so to speak, right? That's where you look at their budget and the financial goals, and then you have that conversation.
Yeah, because sometimes they want to buy $1 million house, and they have, let's say, 5% to put down. Okay. So if we do that, what does that look like? What does that look like for as far as monthly payment? Is that out of their comfort zone, or can we even qualify that high based on what they make and what their other bills are, right? So we'll have those kind of conversations to talk through it. And sometimes, you know, people are ready to go right away because they've saved, they have been on their jobs a while, they don't have a lot of debt, right? But there's other people on the other end of the spectrum where, you know, they just started their career, they don't have a lot of cash. They maybe have student loans or some credit card debt, and we're getting them ready to buy, and maybe it's a year or two out, right? And we set the plan ahead of time, because if you don't know your target, then you don't know what to do to hit the target, right? I coach, I counsel people and get them ready. Right?
Yeah, exactly. And
Mhm.
I'm going to tell you, y'all that are listening, Paige is definitely an amazing coach to work with in terms of, buying a home. Because if you're ready to buy a home, but you still have to look through your finances, and if you can't do it now, then he can prepare you to do it the following year or the next year, or let you know what the steps are. He's an amazing coach for the financial part of buying a home. And it is crucial to be thorough and accurate to ensure a smooth process in looking at the income, the assets, and the debts. They all are part of the home buying process. Now, Paige, moving towards step 3 is qualified. You've given them the max list price that they can go for. Now it comes to choosing the right mortgage. That can be overwhelming, like the loan term, the interest rates, and the type of mortgage, whether it's fixed rate or adjustable rate. What advice do you have for them in this step of figuring out which home loan fits their needs?
You're right, because there's so many choices. And so basically what I do, it's a puzzle, right? So when they give me their finances, right, I kind of start putting the puzzle together. And there's certain loans, like if you have a lower credit score, for example, FHA is going to be a better loan for you because the rate will be lower. Because on the FHA government loan, they're not as credit score driven, right? So if we go to and compare it to conventional, that mortgage insurance is going to be maybe double because the credit score is lower, right? So those are things we look at too, and how much cash you have. FHA is 3.5% down. Most conventional loans are 5% down. So it's kind of a puzzle. It depends on how much cash they have, depends on what their credit score is. It depends on how long they've been on their job, depends on how much debt they have, because FHA is way user friendly. If you have more debt, new on the job, don't have a lot of cash, that's a typical FHA borrower, because the government said, hey, we want to help first-time home buyers out and make the rules less restrictive, right? So FHA is a really good loan program for the first timer. But if some first timers have been on their job a couple years, have, saved up 50,000, okay, don't have a lot of debt, then why would you pay, more mortgage insurance on the government FHA loan, where on the PMI, on the conventional side, with that type of borrower, higher credit score, more down, the mortgage insurance is less. And so therefore your payment will be less. And so sometimes, I'm educating, hey, here are the pros and cons of FHA, here are the pros and cons of conventional, because those are the two most popular loans. What do you think's best for your situation? And then I give my recommendation, and then we kind of talk through those details, right? Because what's good for your mom, your dad, your coworkers, maybe not the best for your situation, right? So, and then VA has its own rules, right? So if you're, former military or active duty, that's a great, probably the best loan program out there.
Right.
Because for serving our country, that's like having a golden ticket. You can buy a home with zero down. They're way more lenient on credit issues. You don't have to have a lot of cash at closing. Their job requirements are less, especially if you're a veteran, how long you've been on your job. So it's very more, it's just, yeah, way less restrictive as well, VA, because they want to say, hey, thank you for serving our country. We want you to own a home, and we're going to make it easier for you than the average person, right?
Let me just say this, because I know a lot of times I get this statement. My friend went and got a home loan and he only paid 4%. And I'm always telling them that everybody's situation, financial situation to buy a home is like a thumbprint, right? Everybody's different. Everybody's
Exactly.
unique. Nobody has the same amount of debt or the FICO score. So
Yeah.
yes, maybe probably your friend did get that percentage, but it all depends on what your specific situation is. So I just want to throw that out there because a lot of people, they hear from everybody else, oh, you should go to so and so because he got me a 4% loan. Well, there's so many things as you just heard Paige talk about the nuances to deciding what kind of home loan, and there's so much to learn. So I just want to throw that out there. So the next question is, and you kind of touched upon this a little bit, the common concerns about down payment and closing costs and FICO scores. There's a lot of concerns about that, and sometimes misconceptions, again, because everybody's situation is different. So what are the common concerns that you hear buyers have at this stage?
I'd say one of them is, they don't have enough money maybe for down payment, right? Or closing costs. And so if they're a first-time home buyer, if they're on the, lower scale of earnings, then there are programs out there from the state of California, for example, and there's other private companies that do for first-time home buyers too, or lower income families. There are opportunities where there's grants available, right? Where they can apply for, I can help them apply for it to get that, to help them with down payment assistance, right? There's a bunch of little every little program, it's got a lot of rules, right? Underwriting rules. So my job is to decipher all that for you and go, hey, based on your income, based on your credit score, based on how long you've been on your job, yeah, we can apply for this grant because you fit the parameters of that grant, right? Because every grant has different rules. So my job, and it's even tough for me, and I do this every day to stay on top of it because they're constantly changing them, right? Because every year there's new guidelines. Like we just started a new year. So I got to go back to these grants and go, hey, what are the changes? Because they're always changing it. So we sit down and then I do the research, right? And I find out the different grants available, the pros and cons. Because some grants, most of them you have to pay back. Some of them you don't, right? Some of them are going to be more conservative on how much money you can borrow, right? So that's the negative sometimes. If they're going to help you with down payment, they don't want you to be pushed to 50% debt ratio limits, for example. Like in other loan programs, you can. They're going to be a little bit more conservative, right? But it is an opportunity for you to get in now and not have to wait 2, 3, 5 years to save money, right? So we talk through all those different scenarios. So there's grants available for first-time home buyers. I'm in lower income. When I say lower income, I mean usually under 150,000 a year earnings, right? Okay. Because if you're making $500,000, you're not considered in need, right? Because there's income limits and sales price limits on some of these grants. So I help decipher all these rules for you. And then the second thing is you can get creative with closing costs. You can be paid a couple of different ways. You can try to negotiate, right, for the seller to pay for some of your closing costs, if not all. It makes your offer look weaker, maybe not as strong as someone else that's not offering, but it doesn't mean you can't ask the seller to pay for some concessions for your costs because it's common. But when there's low inventory, it's tougher for a seller to maybe take that, right? Those concessions, because with other borrowers, they might not need to. There's other ways where lenders will also give credits for closing costs, depending on what program and what rates you get. So creatively, we can get the bank to pay for some or all your closing costs. So those are creative ways we talk about because there are options to limit the amount of cash you need via grants and concessions from either the seller or the lender.
Buyer is interested in buying a house. They contact me and say, hey, I want to go see this house. I want to put an offer on it. My question would be to them, okay, have you been pre-approved? And then I send them to you so we can go through the step with them of getting their documents, finding out FICO score, everything, the whole picture. And then you can tell them, okay, here's the max loan amount you can get, and here's the estimated down payment and closing costs and such. And then they find a home, they put an offer on the home or submit an offer if they get it accepted. Then during that 30, 45 days of escrow, that's when the loan moves into the approval process, right? Once the application is actually submitted. So that timeline for approval in escrow, and that usually takes a couple of weeks to get fully approved for the loan, correct?
Actually quicker because Rosita, right now, the banks haven't been as busy as they were during COVID, right? So I can get someone approved same day or next day because they're not terribly busy right now, right? Because when rates went up and inventory went down, the market slowed down. And so No, I can turn it around sometimes in a couple hours. Depending now, if it's a grant, it takes a little longer, right?
Yeah.
But if it's your standard FHA, VA conventional loan, I can usually get a same approval same day. Like if I met with somebody at 4 o'clock, probably not same day, right? But for the most part, I'd say within 24 to 48 hours, pre-approval is very typical.
Let me back up in saying that it takes a couple of weeks to have it complete because also during that time frame you
Correct.
have to get a home appraisal. The home has to appraise for
That's
the
right.
dollar amount that you are getting a loan for.
Correct. Yeah. So when you're talking about when you actually enter escrow, you're right. It takes, because you have contingencies for the appraisal and your final loan approval and to go through final underwriting. It can be, yeah, I mean, again, it usually takes 2 weeks, right? Whereas in a normal market, but since it's slowed down a little bit, I mean, again, banks are pretty quick within 24, 48, 72 hours. I can have basically final loan approval now. It's way quicker, especially with technology too, Rosita. It's changed a lot because a lot of communication now is uploading of documents into portals and they have access to things digitally now. So it's definitely sped that up as well as far as turn times. Okay.
Yes.
But within 2 weeks, we'll have a good idea because, like you said, you're going to have a home inspection. You might have a termite inspection. You're going to have the appraisal. You're going to look at all the disclosures from the seller, what they're disclosing of defects or deferred maintenance on the property. So, yeah, I mean, in the first 2 weeks, there's a lot going on, right, Rosita? And then our goal is the last 2 weeks or the last week, we coast into closing and we're not still, chasing documents and wondering if we're going to get the loan. And because no one likes to be in the 11th hour chasing stuff around because you want to worry about moving and where you're going to put the couch or what color you're going to paint the kitchen, those fun things, right? Not like biting your, fingernails and white knuckling it till the bitter end. That's what we try to avoid. Okay.
So great segue into the closing process. I know that signing final loan documents is essential a couple days before you actually close escrow. And that can be done in person, or a notary can come to your house and get those documents signed. And then you got to transfer funds, your down payment for the lender. Like how soon, like say you close the escrow is the 30th. When does the funds have to be transferred into escrow? The down payment.
It's a really good question. You usually want to do it. You usually want to do it by the latest, if you can, 24 hours before, right? Because you're trying to sign and wire money same day. It's pretty tight to get recorded and funded the same day. If the wires coming in the same day, because sometimes the wires hit at different times. I mean, most of the time they'll hit in the morning before noon. But if your wire hits after 12 o'clock, it's really hard for the escrow and title company to get that deed recorded on time. So we try to have it 24 to 48 hours ahead of time, the wire. And we also want you to sign. The goal is to have you sign a day or two before closing. So again, you're not rushing and like, oh, I got to sign and get off work. And then I got to go to the bank and wire money all in the same day. It creates kind of like all this anxiety and kind of like a fire drill that's not necessary. So I try to pre-plan ahead of time and have my buyer sign at least 24 hours ahead of time if possible. And we'll have that number. Sometimes, though, if it's like a 20-day escrow and things, we're moving really fast, sometimes we have to do that. We try to avoid it, though, because again, it's already a stressful process as it is. We try not to have everything go perfectly all in one day, like your hair's on fire, and then it just creates more anxiety, which we try to avoid. But yeah, I'd say 24 to 48 hours. And I usually have my loans all ready to go way before then. So they know what their number is, what they're going to need to wire. They know when their appointment is with the notary. Like you said, a notary most of them are mobile now. Well, they'll come to your work or your home to sign you after hours if need be, or you can make an appointment to come into the escrow company. They accommodate you as well. You want to go there. Yeah, you definitely want to do it preemptively a day or two before because it just goes way smoother. And in case something screws up too, because sometimes, depending on where your money is at and what you're liquidating, now some banks require, if it's like an investment or some smaller credit unions, they might want 24 to 48 hours ahead of time before they'll issue that wire, right? So
Yeah.
these are things that we want to pre and ask the questions ahead of time so there's not a hiccup at the end.
And it's important because a lot of buyers, they don't know what they don't know, especially first time home buyers. This is all new to them. And buying a home really it's up there in terms of one of the most stressful events other than getting married. So I always educate my clients and let them know, okay, this is what's going to happen. You'll need this because the down payment and or closing costs come out of their 401k. So that takes time
Mhm.
to request,
It does.
and to actually get in your bank. So to have that ready before you go into escrow is essential.
Yeah, it's definitely better to do it before you enter escrow if you can. Sometimes, people don't because they don't know exactly how much they're going to need yet, depending on what, sales price gets accepted and all that. So sometimes, but I do tell them, hey, as soon as it gets accepted, you want to start that liquidation as soon as possible because some of those financial institutions might require 2 weeks to process their money. You know what I mean?
Yeah.
And sometimes they overnight a check or mail a check. They don't wire it to you. So these are things that you want to definitely have the game plan up front. So we know when we're ready to go, you already can pull the trigger right away. And then we don't have any delays. Okay.
Yes. And so once escrow closes, I get a call from title and they tell me it's recorded. And I get the blessing of calling either me or Paige or both of us will call the buyer and say, it's all yours. You can move in on X date. And there's so much joy. That's the best part about this business is being able to see the joy on families, on people's faces when they actually have a home and it's theirs. It's amazing. So, Paige, I want to thank you for guiding us through this mortgage loan process. I understand that buyers, if you have not done this ever, and even if you have done it, like Paige says, things change. So just give yourself grace, give yourself some time. Any questions that you have, feel free to ask me or Paige. We love to help, especially first-time home buyers, to get through this process. So, Paige, any final words of advice for our listeners?
Yeah, my final words of advice are, hey, why rent? Renting's expensive. It doesn't help you in your financial future or your goals. I mean, you can use your home, create a legacy for not only yourself, but for your kids, and you can own something. And through time, you're going to build equity, the tax advantages. So for me, sometimes it's very intimidating to like have people look at all your finances, or maybe life happened and you're embarrassed about this or that. It doesn't matter. There's no judgment here. It's like, hey, if you have a goal, I'm going to help you try to achieve the goal. It doesn't matter where you're at in life, or I'll meet with you. And no matter what, if you buy a home or you don't buy a home, I'm going to give you some advice that you could take away that's going to help you in anything, right? Maybe when it comes to budgeting or paying down credit cards or just some financial nuggets or words of wisdom that's not only going to help you to buy a home, but maybe just for your future. So, but if you don't do anything and you just kind of blow it off, right, and keep kicking the can down the road, I think you're doing yourself a disservice. So it doesn't cost anything to meet with me to get pre-approved. I enjoy meeting with people and helping them get on track with their finances to help them achieve a goal, because it's fun to achieve a goal together. Like you said, when it all closes, all the things that we go through and all the steps we go through, right? It's just such a rewarding experience and part that I really enjoy too. I feel the joy with them and I'm going to experience that with them. So don't delay, get started as soon as you can to see where you're at. That's my words of
Yes.
wisdom.
And with spring coming up, that's when most people are active in looking for a home. Let's get started now. Let's find out what your market
Mhm.
looks like. What price point are you thinking of? And then work with Paige to be able to get your financials together so that you can go in being a strong buyer. That is already off your plate. So now you're just basically looking for the right home. And that sometimes can take time. So, Paige, thank you so much for being my guest. We will be back February 16th, and we'll talk about specifically CalHFA loan products. You're going to want to hear this. This is great for first-time home buyers that may be struggling with getting the down payment, but you really want to get into a home. These loan products and other down payment assistant products might be able to assist you in getting into your home sweet home. So, Paige, how can people reach you?
Yeah, the best way to reach me is through my cell number is 619-888-7243. Again, 619-888-7243. You can text me, it's my cell phone, or you can call me directly. That's the best way to get in touch with me. Appreciate you for inviting me. Yeah, thank you.
Thank you so much for joining us. Again, I'm Rosita Perez. I've been your host. I'm a realtor and a self-discovery coach. I'm here to help you find your way home, whether it's a physical home or whether home is discovering the core of who you are. Anytime you have questions, please give me a call at 619-665-9086. My website is rositasellshomestoday.com. Don't forget to mark your calendars for February 16th at 12:30 p.m. Pacific. We will be talking about CalHFA loan products. Until then, bye.